We've got unemployment claims coming out in just a few minutes. Tomorrow we'll have the big NFP report, but this morning we also got some volatility from the Bank of England's MPC official bank rate votes. Now, the way to read this, I always forget how to read this, but XXX format. The first number is how many MPC members voted to increase interest rates. Second is how many voted to decrease rates. And the third is how many rated to hold. So all nine voted to actually cut interest rates in the UK. So that's the way to read that. It's a little different than how we do it here in the States. But they have their bank rate votes by their committee, and they all voted to cut rates. So probably some rate cuts coming for the Bank of England. That has definitely weighed on the pound this morning. If you've looked at the British pound, it's been down big time. You can actually see that the forecast did actually come true. We did see a rate cut in the UK. And so let's have a look and see how things are playing out this morning with the pound. And you can see, look at that. For my currency trading friends, big drop here on the pound against the dollar. Let's take a look at that a little closer. So you can see here on the 15-minute chart, just been selling. And of course, that's where the actual meeting took place. And you can see the pound just continues to look weak. Like with hindsight in my favor, I should have kept my pound yen shorts open because, oh my gosh, it just dropped again. I closed out. I took profits yesterday on my pound yen shorts. But this is the difficulty with markets. It's like sometimes, you take profits and the market keeps falling. Or sometimes you say, I'm not going to take profits. I'm going to trail stops. You trail stops, the market rips back the other way. When it comes to currency trading, though, it's different. Currencies are different than trading gold. They're different than trading NASDAQ, S&P, silver. Why? Well, because currency trends are fickle. Actually, yesterday, James did a great job on the stream of discussing this topic, specifically the idea that currencies are they're an unbound market. They don't have some sort of long-term, directional likelihood. Like if you talk about gold, we all know that in 20 years, gold is almost certainly going to be higher than where it is currently today, because it's a market that over the super long term, not necessarily like we could have 2 years of downside for gold, but over the super long term, gold should go up. Currencies are not like that. Currencies don't have a bearing. You go back to scroll as far back as you want, right? We're trading at 1.03. Look, we're at 1.03 in 2003. So this market has not moved anywhere. I mean, it's moved really far in one direction, then come all the way back and then all the way down the other direction. But you can see where I'm going with this. It's an unbound market. So when I trade currencies, I trade them a little differently than the way I trade gold or an index or something that I have more of a, I'm looking for a directional trend to take place in. When it comes to currencies, there certainly are trends. Like we've still got a downward trend forming here. But this market is by its nature over the decades, more range bound over the long term.
Market analysis, free trading courses, EdgeFinder data, and special offers. What do these things all have in common? They're all available for you right now inside of our free Discord. You can click the link down in the description below to join the free Discord today and get access to all of this and more. Stay up to date with all the latest trading information and A1 content. And if you want to upgrade to our Gold VIP Discord that features every single trade that Trader Nick and our other professional analysts take, you can find the links for that in the description as well. So don't wait, go check out the free Discord today.
Trust me when I say I am interested in buying the indices. I have the signals to do so on a fundamental... What is this? Gold is getting a bullish rating? I need a sound effect. Okay, just block that out, Nick. Don't pretend you didn't see that. The indices, right? NASDAQ, Bitcoin. Actually, look, we're losing even the readings. NASDAQ, okay, NASDAQ and Dow Jones, I am loving the upside potential for these two for these two indices. I'm a buyer if I can get the right setup. But the right setup is not right now. I can't justify, like, look, NASDAQ, if you give me this move, boom, okay. If the EdgeFinder still has confirmation, I can do that. I can look for that setup. That's a trade I take over and over and over and over and over. I love that trade. Doesn't work out every time, but it's a trade I take every time I can. Look, if we drop down to really big longer term levels of support, then I'm interested in that too, because I would sit through the chop if I can get a good price, but I have nothing to do right here, right now with the indices. Now, can we talk about the elephant in the room? What are those? What are those gold bullish rating on the EdgeFinder? EdgeFinder, don't do this to me. Don't do this to me. Right before NFP, you can't give me a gold bullish reading. Okay. Look, I don't fight my system. My system's smarter than me, okay? Can I tell you something? The EdgeFinder is better than me, okay? You know why? The EdgeFinder is not susceptible to emotions. The EdgeFinder is a system that does not give two craps about, oh, the market's running off without me. Oh, I'm missing out, right? The EdgeFinder doesn't do that. Also, we got news. Sorry, I got really distracted by this. Let's see what happens with unemployment claims here this morning. Expected to be 214K. Let's take a look at the all markets view just to see if we get any sort of market reaction to this. Let's see. Nothing too much here. Dollar index. I'm going to guess that that's pretty much an as expected reading. Okay, pretty much as expected. 219K for unemployment claims. So more people than expected filed for unemployment, but not by a huge margin. So the market's not going to be very surprised or move very much on that. What's your chart of the day?
Yeah, so for me, it's gonna be the pound and the US dollar.
Okay.
So before this price action, I was actually in a buy setup after this trend up and a flag formation, but I never got the higher low to reduce risk. I do something similar to you, so I never got like a pullback and then a break of the high. Unfortunately, it came all the way back down, took me out for a loss. So that was a bit problematic, but now I have flipped. I've seen a lot of selling pressure. An hour ago, we had the interest rate decision, and I really like this bearish momentum on the 1 hour chart. I'm definitely looking for some entry setups. Like there was just one pullback candle here. It was very small. So I'm going to be looking to get in like a flag formation similar to this one, or just a retest of this level of the low, let's say something like this. And yeah, I really like this chart. In terms of the interest rate decision, well, looks like it was exactly as forecasted and there wasn't much movement, but I like that we are overall confirming this bearish momentum. So yeah, pound US dollar today is gonna be very interesting.
Love that. So looking for continuation to the downside on the pound and dollar. I'll add one thing on the fundamental side that I thought was interesting about the Bank of England's report. So yes, they cut rates as expected, but there was one, and this is just to show you how very sensitive the market is to fundamentals, is you had all 9 committee members vote that they think a cut is appropriate. And the expectation was for 8 of them to think a cut was appropriate and 1 to say hold is appropriate. That's how specific. That's how the market is just wired to look at this stuff so specifically. Is the committee members, who of course have a big role to play in what the Bank of England does next with their interest rates. All 9 of them voted that a cut is now appropriate. We call that a very dovish rate cut. So they cut the rates as expected, but it was done so very dovishly because now they're basically all thinking, hey, a rate cut is appropriate. So yeah, I love that chart. Pound pairs are moving right now. Miko, chart of the day. Is it anything pound related or something else?
Actually, something else.
Okay.
Excuse me. Silver looks really good. We've seen a lot of upside for gold recently, and it looks like silver is starting to pick up the pace a little bit. So I'm looking for buy opportunities on this one. And what does take my interest is a retest of this high, a little bit more intraday, but I do like the setup here around 31.6. If we could see a reaction there, I will be looking to see if we can at least trade it back to the high. But why I do like silver is that the longer term move looks pretty likely. We're still seeing higher highs and higher lows on the daily chart, and we're just about taking up the highs here on the left, which is a positive sign because it means that there's a less likely chance that we do have a big sell to the downside. So yeah, I'm very bullish on silver. Keeping an eye on the retest of that zone, not too far away. So yeah, silver is definitely the one market I'm looking at the most.
I like it. I was actually looking at silver myself yesterday too. Technicals look great in my opinion. You're starting to see some momentum build for this metal. And just a fun side note fact, I watch a lot of like metal stacker YouTube content just for fun. It's like people who buy physical gold, silver, and they just stow it away and they give it to their grandkids kind of thing. It's really, you would think it's mostly wholesome, but it's also a lot of people who are like preppers for the end of the world kind of stuff. But what I actually found really interesting is there's some interesting stuff happening with the whole Canadian tariff stuff. A lot of silver in the US that's bought, a very popular mintage is the Canadian mint, which produces the Canadian maple leaf, which is a really kind of iconic coin. Well, tariffs, if they go into play, will also increase the cost of buying that silver, because remember, imports into the US, if they go up by 25%, the cost of that silver mint could substantially go up as well. So tariffs are playing a role here in the metals move up in multiple ways, not only from the physical transaction of tariff costs, but also just the uncertainty that goes with them. The market is on edge about this, and while indices can't seem to find a direction, gold and silver are loving this uncertainty that we are sitting in. And I don't think anybody would disagree, whether you dislike what's going on with administrations around the world. We're sitting at a very uncertain time. Things might be better in a year, things might be worse in a year. And I think markets are telling you they see that in the metals. They're trending very strongly to the upside right now. Speaking of metals, I also want to ask you, Miko, while we were just talking about silver, what are your thoughts on gold? Is this a market that you're also watching or not at all?
I am watching gold as well. I prefer silver because silver's not yet at major highs, whereas gold's taking up highs.
Yep.
So I still see value for silver to keep going. Of course, I do expect gold to keep going as well. I think we do have that infamous 3K mark just above us there. So that could be maybe where gold is being attracted to. But the way I see gold right now is a bit more intraday plays. If I'm going to be interested in gold, I need a bigger pullback, at least to the high here at 27.88, or preferably back to this level, which is where I was looking to buy last week or the week before, but unfortunately just missed it. But the way I see gold right now, there's a lot of momentum in the market, so more kind of intraday pullbacks on the hourly, maybe even lower, looking to kind of keep up with these higher lows. So still very, very bullish on gold. I expect this to continue as long as we maintain those higher highs and higher lows. But the way I see silver is that we still got targets, highs to take out, whereas gold's kind of already done that job. But yeah, I think we'll probably continue to trend as well.
Honestly, man, I woke up this morning. Well, actually, I got to the charts this morning, and it was one of those moments where I didn't know if I should laugh, cry, throw the monitor at the wall. Didn't have a clue. So I've been showing you guys this pound dollar position that I took. I reduced the stop by 50% ahead of FOMC that we had. And this trade looked fine. The market's opened, gap down. I was like, yes, this trade's sweet. It's all good to go. Today, wicked out by, actually, let's just see how much this was. This was 11 pips, which, to some of you might sound like a lot, but for a swing trade, it's not. So that was really frustrating. And look at where price is now. One of those trades that just didn't work out, barely. Now, that would have been fine, but it also happened on euro dollar. Exactly the same thing. Stopped out. To be fair, maybe I should have had a bit of a wider stop, but hindsight's great. Stopped out literally on the pip on this one, and then came back down to entry. So I'm not a happy guy today. So that's good. Yeah, great way to end the week. But there you go. Okay, so update on my position. So I'm still in these euro-dollar shorts. I think I showed these yesterday or the day before. They were roughly in around here, so pretty much in complete drawdown yesterday. Luckily, US dollar strength came through this morning, so currently sat in a very small amount of profit. I'm looking to hold these down to around 1.01. Oh, sorry, 1.1. So we'll see, but it's dollar cost averaging, so it could go either way. If we get negative news tomorrow from an NFP and unemployment, then I'll likely just cut the position and look to add in at a higher price. But yeah, we'll see. Looking to get into gold actually as well. I might execute this on stream. It depends how the market moves. I'm on the 30-minute chart, so if we can get a 30-minute bullish candle close, maybe I'll look to take it. So we had gold actually pop up on the EdgeFinder with a reading of +5, giving us a bullish signal. So it would be quite nice to get into gold and join this bullish run that I've missed for this whole period. So that would be good. But again, we'll see. I don't want to be the guy trying to buy the very top. But is this the top of gold? I don't think so, because yes, we've had an aggressive run to the upside, and yes, I think we are due some sort of pullback. Whether it's going to be a big one, a small one, I don't know. But the reason that gold's still moving to the upside is still in play. So buying it to me seems like a very sensible idea. I've actually placed a long position on silver. I heard Nick talking about silver. So I'm looking, this is a position trade. So this isn't something that I'm doing, I'm going to be closing anytime soon. But I'm looking for around $38 on silver. So it's a pretty small position size. So I'm looking really actually to get some sort of pullback on the weekly time frame or the daily time frame, so I can add in and sort of build a bit of a bigger position here. Dollar Swiss also showed this one. So this again is a position trade that I'm looking to hold for the next maybe year, maybe 2 years. I don't know. We'll have to see again how the economics develop. And Swiss yen, I'm now looking to get into Swiss yen. I've been speaking about this one too. So leading on from again what Nick was saying just before I came on about the yen, it seems like they're on a path to normalization. Seems like there's quite a lot of optimism at the moment around the yen. So if we look at the index, it's looking pretty convincing actually. We could be, well, the way I view it, we've got two situations here. Either this is going to just be a lower high and we've seen the yen benefit from dollar weakness, temporary dollar weakness, and then we could come back down, get an intervention, and then maybe we start heading to the upside. Or the other option is we come back to this previous high, we break out and start crawling back up and giving the yen bulls some hope. So we'll see how that develops. Again, I'm looking to get in pretty small on Swiss yen. I just think it's a little bit, it's not where I want it to be to get into the first position. I would really like to see just some sort of bullish movements, very small, just something. But obviously every little thing helps in trading, so we'll see how that goes. But yeah, mainly just watching these euro-dollar shorts at the moment, monitoring them and looking to maybe scale in if I see an opportunity. And again, looking to get into gold if I can see. Yeah, we've got 10 minutes actually until this candle closes. So it'd be quite nice to get into a gold long potentially and see how that goes. Bank of England cutting rates cheered me up. You know what, Lee? It would have cheered me up if my trade wasn't stopped out in the manner it was. Oops. I mean, anyone that's been watching my segments regularly knows that I've been a pretty big bearish guy on the pound, but unfortunately I've actually not made any money on it. So that's great. Luckily, I'm not too salty because I made pretty good money on the euro-dollar shorts I've been calling, but it would have been amazing to catch the pound as well. Yeah, I don't know where all these guys have come from. It's strange. I just don't see the point. Anyway, Kiwi futures. I don't trade futures, but yeah, we can have a look at the Kiwi in a second. Yeah, Chandler's doing a good job cleaning up the trash. Tom, good to see you. Raymond, I am shorting Australian dollar yen. Could you have a look and tell me for how far it could go down? Oh, that's always the golden question, isn't it? How far could the market go? Now it depends. Oh, it would have been good to get that. It depends really, because I think in the long term, there's a lot of potential actually for yen long. So it depends how long you're willing to hold it or how long you're willing to really get in, get out and do what you need to do. So I'm not going to look at the economics for a take profit, because if I was, let's say, for example, I shorted here, or I shorted here, actually, let's say, I'm not going to close out here just because we're coming into a support. I'm going to close out when the data tells me. So if the Bank of Japan starts holding rates, or if Australian dollar starts doing better and for some reason they start hiking rates, whatever it may be, that will then be the signal to close, not necessarily technical levels. So it's hard to really say, because obviously we'd have to be in the moment to really have a solid idea. But again, just based on technicals, I think potentially these levels wouldn't be outrageous to say. Again, if we are looking for some long-term strength, and the Australian dollar's not doing great, I think, yeah, possibly down to 88 would be first take profit I'd be eyeing up at the moment.
I've got a ton of positions. I've got like 70 open positions in Forex. I'm building on mostly Swiss pairs. So my Aussie Swiss, I'm still long. I probably made, I don't know, $20-some thousand last year on just carry trade, and I closed out my dollar Swiss positions for almost 10 grand. So I mean, I'm still in Swiss. I'm still in my dollar or my Forex positions, but I'm a position builder. I use Forex as like a 3 to 6 month or 12-month investment vehicle, where it's like I find a good trade, I take a good trade. So I've talked about this a lot. I review this stuff a lot. Why am I long Aussie Swiss? I get positive swap. We're sitting here at these like basically all-time lows. If all this does is, range, that's fine for holding, but I'm looking to see if we have a swing. So low to high, higher low to higher high, that profit is good enough for me. So that's all I'm looking for, is like, I'm going to hold this thing based on a swing. CAD Swiss is looking better. I got a ton of positions in here. This would allow me to be profitable on everything that I'm having for CAD Swiss. If this is a swing to symmetry and there's potentially a fifth wave, I might hold this for either profit target here or profit target here. 66 to 66.50 is a big profit level, but ideally I'd like to get to 7,000. There's a big pocket at 7,100, but it's obviously been sideways. So I'm mostly enjoying positive swap. I have dollar cost average into a ton of these, and I'm just being extremely patient, like extremely patient. But this is a monster pocket back here. We also have a major level of past support in this area. So if we can get out of this choppiness here, then I think we have a 5-wave move coming back to like 6,700. And again, I have like 30 positions open. So if I'm right, I'm going to make a lot of money. So I don't just dabble in Forex. I mean, I freaking trade Forex, but it's like, I don't get in the market every single day because Forex is noisy. It's a noisy market. I don't scalp anymore. I'm mostly just a longer term trader. But my, Euro Swiss, same thing. Got a bunch of positions here on Euro Swiss. Dollar Swiss was one that paid out really nicely at 9,200, and we're trading at 90.50. So I'm just waiting, but I stacked in, 30 some trades, or close to 30 trades over this window, and then closed out at 92. Initially, I wanted to go much higher than that, but because we had so many legs here, I just waited and added on trend lines and added on equal lows, and ended up making, like, this position here was every position profitable. Okay. Do you know what percentage your total yearly profits are? I mean, it's less than it was. I mean, I had an $8 million currency fund that now is over into over into stocks, options, trading more stocks, options, ETFs, things like that. It's just easier for money management. For me, like, managing money on the stock and option side is way better than managing Forex. I just say that because you got to deal with flash crashes. You got to deal with, just stupid crap that happens. Like, hey, my robots got disrupted because the broker changed the servers on me. Like, I've dealt with that for years, and it's just like, enough. I've had enough of it. I had too many accounts linked up where it's like one server change for my broker and my master account means that I've got, 20 accounts I had to go in manually and change all these positions and update everything. It's such a huge inconvenience. I just got tired of it. So, and I can't trade with defined risk like I could in trading options. But anyway, percentage of profits. I mean, I still make really nice chunks of profit in Forex, but I mean, last year I made like 400 grand, and I would say about 30,000 was Forex ish. So it's just because I have a bigger pie now in stocks and options and the bigger, brokers versus just trading Forex. But look, I still love Forex. It's a pure technical market, which is why it's always near and dear to my heart. But the way I've made the most money consistently is not by day trading and not by scalping and not by over leveraging. It is by finding huge levels on huge time frames and building positions very small and building them up to a position that I'm happy with, like literally building, micro lots into mini lots into standard lots, and then taking the chunks of profit when I add to my positions and make my winners much bigger. That has helped me be very consistent for the last, probably close to 12, 13 years now. I've traded Forex since 2007. I day traded for a couple of years. I was scalping. I was, aggressive. And then I got into just much more position trading. And for the last, decade plus, it's been really consistent. So it's not easy though. And it's not for everybody. It's like most people are so impatient that, I want to swing trade. I want to trade on a 1 hour chart. Then good luck. You can make it, you can do it, but that's not my style. All right. Anyway, but I'm still in a bunch of positions on Forex trades. They're just waiting. I've just got some positions built. I'm literally long against the Swiss on everything except for Swiss yen is not a big position. That is this trade. So I'm up a little bit on euro and Swiss yen, but this is just like a single swing trade. Everything else I just have stacked positions in my MT4 accounts. Like I'm long Aussie Swiss, long CAD Swiss, long Euro Swiss, long Pound Swiss, long New Zealand Swiss. I'm not in dollar Swiss anymore. Also, my dollar CAD position I closed out for profit, and that was the run from 34 up to 45. So I got out of that trade for a nice little win on like 10 positions, and then I'm just gonna wait. So it's mostly just hanging on to Swiss pairs right now. That's it, and I'm fine with that. Even though I have like 60 to 70 positions open, I'm fine just sitting and waiting. I get positive swap. Price isn't really doing much. I don't have to check it other than maybe spot check it here and there for the day or the week. I can check my MT4 app. I can look at my broker platform once a week. Nothing crazy. So pretty simple. To me, it's simple, but you got to have the patience to sit on trades for, 3 to 6 months and not worry about it. But that's what I'm saying. Most people don't like to do that. Most people are like, I've got 2 to 1 leverage. I'm trying to make, I'm trying to take $1,000 and turn it into $1 million. How do I do it? One bite at a time, I guess. All right. Anyway, what else do we need to talk about? It's 11:03. Let me check on my SPX positions. I just want to see if I've had some decay. I haven't hit my profit target yet. My dollar's still trading at 90 cent. What a sticky trade today. Iron Condor would have been a good trade. So anyway, I'm just going to wait a little bit longer. Hopefully it stays around that like 60-75 zone today. Let's see here. I did oil, I did gold, I did silver. We did Bitcoin. 10-year is up a little bit today, 27.27%. The dollar's getting a little bit stronger. I mean, this has been a decent decline. More information needs to come out here, but looking at this third-party inflation gauge, we did have a nice big drop to the downside. It would be lovely to see that through February, as we get to CPI and PPI and PCE, which is usually the end of the month. Probably if it's not this week, it should be next week. So we have non-farm this week. What's next week? We actually have CPI lined up next week. Yep. So we have US CPI on the 12th, and then we should have what's this? Yep. So we have PPI, CPI next week on the 12th and 13th. That'll be in another important like inflation reading. What's headline CPI, what's core CPI, blah blah blah. So we're going to get more inflation news. If this is anything that's showing some accuracy, perhaps we are going to start to see that it's printing lower. So if the market is looking at hitting all-time highs, improved inflation data might help. Okay. So just food for thought and can this market go higher? Of course. It's almost a scary amount of optimism that's baked into the market. The Fed is likely not doing anything rate-wise. Somebody said yesterday the Fed's going to cut in March. Not from what I see. I think right now it's like the Fed would only be willing to offer a cut if we see, and I don't think a 1-month data point is going to be enough to justify the Fed cuts. Look, the Fed has already cut 100 basis points. I think the probabilities right now at the Fed are about accurate. I mean, this is designed to be a transparent tool that the Fed continues to drip this information in the market. The market's anticipating a rate cut coming in June of this year and then in December. Okay. Now, what's interesting is yesterday, I'm pretty sure I looked at this either yesterday or earlier this week, and for 2026, the market was looking at maybe one more cut, but instead there's 0. So if we cut in June, cut in December, this is looking at 0 cuts through 2026. So if the Fed gets down to, let's put them at like 3.5. 3.5 to 3.75 would be their cash rate window. As long as we see, like, let's say core PCE, as long as core PCE is less than, I'm going to say 2.8, okay, that's still considered pseudo-restrictive, but ideally I'm thinking that PCE and core PCE probably wants to get less than 2.5. And I don't know if this is like the target. They're saying 2%, 2%. I mean, is this a target? Core PCE has to be 2%, or is it headline CPI? I don't know. But even if they cut rates over the next, 6 to 12 months, this is about as low as they're going right now. Now, where would the Fed cut more? Recession, right? If we saw a nasty, break in the markets and the bond markets rip higher, the equities market drops, then the Fed will probably have a plan to cut rates within a 6 to 12 month window. Would be a little bit more aggressive because rates would plummet, right? Bonds would rip higher, yields would fall off a cliff, and the Fed would have more ability to possibly cut, which again, it's a one-dimensional play that they have. It's not the best thing. I don't know how bad it gets, but in order for the Fed to be really aggressive on cutting rates, they would have to have, a recession. That we'd have to have a terrible phase in the market where things drop hard, things drop fast, and then the Fed would be willing to cut and kind of backstop and save and add liquidity to the markets. Because right now they are, cutting their balance sheet by leaps and bounds, and they are, things are rolling off the Treasury pretty aggressively. But how much longer they do it, I don't know. Like they have been slowly tightening for the last year or so, and nobody seems to say like that's a bad thing, right? Tightening means less money and less liquidity overall. And so if they end up facing some type of like headwinds and there's less money to go around, like that's just going to make the exits harder and faster, right? So anyway, that's it. I think I'll wrap it up there for today. I'm going to keep a close eye on the SPX this morning. We have non-farm payroll tomorrow morning. Hopefully today's price action is relatively calm leading into the major catalyst tomorrow. So if it's just relatively chill today, that's fine. Non-farm, either a bump up or a bump down. This is essentially my technical outlook right now. This is SPX high. There's a high. We are making lower highs right now. Okay, is it able to get up to this level? Sure, but is this level defended again and another drop back into this trend line? Or worst case would be if the SPX breaks below 6020 or 6,000, then we're probably coming right back down to revisit. This is a deep seek low. This is our tariff low. This would just be more, more volatility to the downside. And this is the kind of buckle up approach that we talked about. If we don't have clear direction, if the market's not able to regain and eclipse all-time highs with sustained momentum, then expect some highs and lows and choppiness today.
Did you know we do a live trading show Monday through Friday with guests from all over the world? To get notified when we go live, click the bell button next to the subscribe button or check in at 9:30 a.m. Eastern Time. We have helpful, free content in the description below and on our website, a1trading.com. Thanks for watching today's video, and we'll see you tomorrow.